Welcome to the Market Huddle with Patrick the Content Machine Ceresna and Kevin the Macro Tourist Muir. So grab a drink, get comfortable, and get ready for a deep dive into the markets. Take it away, guys.
Okay, hit it.
It's January 24th, 2020, episode 64. I'm Patrick Ceresna.
And I'm Kevin Muir. This week we welcome Boris Schlossberg from BKForex to the show. Boris walks us through his varied and interesting career with some great stories about his crazy days in New York City when it wasn't so sanitized. Then we're going to talk charts with Patrick. And in our WTF video, the Salesforce CEO goes to a funeral for capitalism along with the dude and Walter Sobchak.
In This Week in Trading History, we talk about the famous corner in the Stutz Motor Company, and then we discuss the top 3 things to watch next week. But before we get started, let's get to our beer sponsor. Lena, hop on here.
Hi.
Who's the beer sponsor this week?
So this week's beer sponsor is Phillips Brewing Company's Electric Unicorn
Nice.
White IPA.
6.5%. What are we drinking here, by the way?
Beer.
I don't even know what white IPA means.
So there's a little blurb here. So this mono-horned laser beast is now available year-round. Sweet bananas and fruit flavors are balanced against the citrus hop background that finishes dry.
This is probably one of the most interesting beers. I don't want to say it's bad, but I don't know what I'm drinking here. This is crazy.
It's actually okay. And it's not white, which makes me feel good. If I'd opened it and it would look like milk, I would have been a little worried.
All right.
I like it.
All right. I'm going to keep drinking the beer. Kev, give us a disclaimer.
Okay, nothing in this podcast should be viewed as investment advice. Listeners should consult an investment professional before making any decisions regarding topics mentioned in the show. Side effects of too much huddle may include bull market dehydration, primary trend amnesia, and a forced repo market enema. It's our pleasure to welcome Boris Schlossberg. Boris, welcome to the show. And you were giving me a hard time earlier, saying wondering if I could be a good New Yorker and pronounce your last name correctly. Is that correct?
That's close enough. It was pretty good. Yes, but that is a litmus test, because you ask anybody in the street, they could pronounce that name in a heartbeat. But of course, anybody outside of Manhattan or Brooklyn is going to stumble on it completely.
Why is that a very famous name in New York?
It's a German Jewish name, and you literally have to have that hush, like all of those sounds that are so common in New York that nobody else outside can pronounce. Listen, when I'm in the South, people don't even call me by my first name. They think my name is Forrest. They don't even know the name Boris. So I'm like, I'm not a tree. I'm not a tree. My name is Forrest. Okay. So.
Well, listen up. Folks, you're going to be in for a real treat today. We've already been chatting with Boris. He's got a lot of tales to tell and talk about his career on Wall Street and all what he's seen in the markets right now. But before we get to that, why don't we kind of step back and talk about how you got here? So you were mentioning that you went to Columbia, which is I went for the first time. Ed Harrison from Real Vision took me, and I was just amazed at what a beautiful campus it was and what an outstanding university.
It's gorgeous. But when I went to Columbia, it was completely different. I went to Columbia. This is just, first of all, to show you how old I am. I survived the '87 crash. I survived the 00 crash. I survived the 2008 crash. So I pretty much consider myself a pretty good veteran at this point. That's how old I am. So when I went to Columbia,
you're a triple threat. You're a triple threat.
Yes, I guess that, and the problem is, so that's funny, Kevin. I think it's probably that's the bias. Having lived long enough, I think that the problem is that you just see all this stuff bubbling up all the time, and you're always correct, but you're always early. That's the problem, because we're so pessimistic.
Welcome to the club.
Right, exactly.
So tell us about Columbia back then.
When I went to Columbia, this is the story of Columbia when I was there. It was not Michael Bloomberg's New York at the time. There was a story like my freshman year at college. These two guys decided they saw a carpet in the street, right? And they were like, oh, great, carpet for our dorm room. They bring the carpet up, and these were big guys, and like it was a little heavy, right? They roll the carpet out, and a dead body rolled out of the carpet.
Come on.
that was the New York of my time. You know, when
my God.
Subway had graffiti, and you know, you know, on the Riverside Park was not a safe place to be. So, but regardless, Columbia was an amazing place. You know, Columbia has what I think is what we're all missing in the West at this point. Columbia has something called core curriculum, where they force you to read Plato and Aristotle and Homer and all the Greeks and Spinoza and art, regardless of whether you're going to be an engineer, a doctor, or anything else. And that foundation to this day, I think, is still the reason why I have half the brain that I do. It's the kind of old school liberal arts education, which, you know, is so frowned upon, that I think is amazing as far as providing the analytical skills for you. Because, you know, really, Western civilization starts and ends with the Greeks. There's really nothing new as far as analytical thought since the Greeks. And I always feel so sad that most people don't have that foundation, because it really limits their ability to kind of view the world in a proper perspective. So to that extent, you know, Columbia was a great, to this day, I still love my education at Columbia.
What did you study?
Okay.
I studied economics, you know, which was the useless art. And of course, what's fascinating, you know, like the older I get, the more I realize how literally every single thing that they taught me was a complete lie. Like literally no single economic model that they have, these fancy, beautiful, elegant. I mean, there's a reason why economists are so 100% wrong as far as their prediction.
Boris, I was talking to a young person the other day, and he told me that at fourth year in Queens, there's actually a course where the professor goes through and proves to you why, like, actually, when you do the numbers, none of the theories work. So he'll go and take, like, you know, and he'll go through it, and he'll basically dispel everything you've learned for the past 4 years. He'll say, here's how this doesn't work. Here's how this doesn't work. Here's how this doesn't work.
Absolutely. You know, absolutely. Because it completely, you know, it assumes that we are all these perfectly rational robotic beings when we're the exact opposite. I mean, basically the whole system is designed to, and that's why markets, you know, I think it's interesting. A lot of people approach the markets in the same way that economists approach the world, in this rational, sort of normal way. And that's why they get their head handed to them, because the markets are the exact emblematic of what the real world is like, which is complete and total manipulation and subterfuge. You know, it's all about lying. It's rather than, you know, the telling and trying to figure out, you know, who's trying to fake out who, much more than trying to figure out the greatest, purest trade, you know. So in some ways, I just think that Warren Buffett probably has done more damage to people than anybody else, because he, you know, what Warren Buffett does in real life to what he says he does is, we all know, completely different things, right? But he makes it sound like, oh, you know, you can just go find a nice company and you're gonna make tons of money in it. Never. You know?
That's right. As long as you buy a preferred with the special conversion rate, with a big huge coupon.
You will carry for the rest of your life, and you have a whole bunch of inside information. Yeah, absolutely. You're doing great.
Right. So Boris, you come out of Columbia. How do you learn about the markets? What's your next step?
You know, so it's actually interesting. When I was in Columbia, did not have. This is the irony of the whole thing. So, you know, later on in life, I trade FX, but my first interview out of Columbia was on the FX desk of the New York Fed circa 1982, right? And they liked me, and they offered me a job. And I was like, nah, it's okay. I'm not that interested. And I'm like, what an effing idiot. What a complete moron I was. Like, this was like literally, and I was like, nah, not that interested. I'm like, you know, now that I look back at it, I couldn't believe it. You know, I was literally could have been at the heart of everything, you know, before the Plaza Accord, before everything. So, you know, I didn't really get involved. I didn't really get kind of interested in the markets till I guess like mid 80s. I think, like, you know, ironically enough, it was Market Wizards that, like, I think that's the crack book that gets everybody involved. I mean, that's you know, that's the gateway drug.
Yep.
You know, and I actually met Schwager one time, and I'm not kidding you. I've read Market Wizards 50 times. You know, like I've read that over and over again. So I think that's what kind of got me started. You know, and then I wound up working for Drexel Burnham, right? Like in the height of the insanity of the mid '80s, which was a lot of fun.
And did you work in the bond department or the investment banking?
Yeah,
what did you do?
I was in equities, but like I used to take the elevator with Dennis Levine every day. He was like the most handsome investment banker ever, and like you never knew, like just it was like unbelievable, unbelievable.
That's
That
hilarious.
I was basically working around criminals my whole time without knowing a single thing.
So you were there for the crash. Tell us about that, because there's not a lot of people that were in equities in '87 that are still around trading.
That is why. So I think that experience just colors your view for life, because I mean the crash was, you can't explain to people that and this was in the day where I don't know if you guys even remember something called the Quotron. Like if you watch Wall Street, right? If you watch Wall Street the movie, like Bud Fox has a Quotron on his desk. That was a dumb terminal that basically gave you quotes from the exchange, right? And the day of the crash was just the most surreal experience ever, because the day on Friday we had a 100-point Dow down move and everybody was kind of freaking out, and then and then the other thing that people forget about the crash is it had the greatest stock market rally ever inside of that day. Like if you went long during the day of the crash, you would have made a ton of money, but almost nobody ever realized that, because what happened is stocks fell to the floor, and then at 11 o'clock in the morning they did a 200-point, which at that point was like a 10% rally in the Dow. We had a massive rally, then they died. So like if you had bought the 10:30 dip, which happens so often, you managed to sell the afternoon, the peak, you actually could have made a ton of money being long, But then the most surreal part of the '87 crash was that last hour. It was like I fortunately never in my life have been near combat or been near anything like that, but it's the only thing I could just imagine the equivalent, because it was just just relentless. Coca-Cola was trading like five, like the ask was underneath the bid by like 5, like whatever. It was insane, and it was kind of very sad, because it was still a time when a huge amount of dealing was human to human, and specialists were the primary liquidity providers. And the guys who actually, the job of the specialist was to buy when everybody else is selling, sell when everybody else is buying, right? You could have, you could scream at them all you want, but they provided a very useful function. And there were a couple of specialists that literally went bankrupt because they kept buying into the close, and it just died. And then what was interesting is that the other thing is people don't understand is so Alan Greenspan lands. He's in a plane. He doesn't even have a clue what the F is going on. He lands and he goes, "Oh, how'd the market do?" And some guy goes to him, "It was down 508." Right. So Greenspan goes, "Oh, that's not so bad," because he thinks it's 5 points, 0.08. Right.
Right.
And they go, no. It's 508 points down. And he just went apeshit. And that's, so he went, he basically did the first kind of QE. He said, we'll lend anybody anything and everything. But at that point, a lot of guys had already lost access. They basically were bankrupt and gone out. And also, obviously, as usual, the credit went to the banks, not the individual business people, which were the market makers. And a lot of the specialists, had gone out. So, and then, the day after that wasn't when we first started out. The day after that, there was no bid, and it was only I forgot already the name. There was this really it's actually in one of the Market Wizards stories. There was this really obscure little index that was very, very, very volatile that traded, and one of the guys in Chicago just decided to come into the pit and started buying the index, and just that one action was literally the action of one guy that turned the sentiment around, and everybody started to buy the market, and we kind of took a breath. But it was a really, really interesting experience. And of course, everybody felt we're going to go into a depression, and again, it just proves that history is never the same, no matter how much you try to make it to be.
Right.
I remember a great story of a buddy of mine who was around in '87, and one of his clients is trying to sell General Motors, and he's calling down to get a quote on General Motors, and it was literally no bid during the crash.
Yeah, it was like just no bid. It was crazy.
It's insanity.
But
So,
but wait, and then that's the joke where they said something like, but the machine shows like 35 bid, and the guy on the floor said, "Sell it to your fucking machine, then."
Exactly.
Okay, so from there, Boris, you go off and you actually land in the kind of world of technology. Why don't you tell us a little bit about that?
Yeah, I always call myself the Zelig. I always feel like I'm Zelig because I always manage to go from one bubble to the next. So I left Wall Street, and again it was just kind of I stumbled my way through life. I forgot even how I started in technology. Internet was starting out. Well, basically what happened was my ex-wife was a headhunter, and she was actually a very, very good one. And we were looking to kind of start a business. And at that time, obviously the most fertile part of the labor force was high technology. And I kind of also, and I was like one of the early, like I had DSL in 1988, 98 or whatever, I was just one of the kind of people.
But Boris, nobody's going to know what that means. I bet you even Patrick doesn't know what that is.
I feel like literally 1,000 fucking years old, really.
Yeah. No, I remember DSL because DSL was the same up and down, right? It was a lot better.
Right.
So
you have to understand that everybody was using dial-up. I mean, people like I have a 7-year-old daughter that has never seen a rotary phone except like as a toy. All these things. But bottom line is, we'd gone into technology, and I basically kind of muscled my way into a whole bunch of startups. And we had it was amazing. That was literally the greatest bubble ever. That was just like it was like a permanent heroin rush to be inside of that little vortex, And the thing about this, what's interesting about that particular time, if you remember, this was a time when stocks. So because I was working with all these startups who had all these stocks like i2, BA Systems. These are all names that nobody remembers because they all went bankrupt. But at that time, they were just massive triple-digit stocks. They were all at that time like would open up 50 points higher, right? Remember?
Right. Like on the IPO, you mean the first print? So they'd sell it at 20 and it opened at 70 or something, right?
Like first print, but then like we would just have NASDAQ, when NASDAQ went to like 5,000, and we would have days when NASDAQ would go 200-300 points in a day, and like the stocks would go up, like they would open on the opening $20 higher, called up, and then just raced higher from that point on.
Right.
And so people one of the things that's interesting about that time is that if you what I was doing is I was working with placing all of these high technology executives because they all had stock options and everything else. I kind of was trading stocks, just as on a purely hobby basis for myself. And it was also the time, obviously, when the whole electronic trading revolution was really coming online. So you had a chance to, you had a sense that this was the first time retail had access to level 2 and stuff like that. So you had a chance to kind of participate in the markets while being at them. But the reason why that time is so vivid in my mind is because people are going. As a matter of fact, who is it? Oh, Mike Santoli, who I work with all the time on CNBC, posted the other day. He goes, everybody who's claiming this is like 1990s doesn't know crap, because in the 1990s you had 1 million IPOs and they all were completely blown up and the valuations were crazy, right? And I'm like, Tesla. It's the exact same frigging thing.
Oh, I agree.
The price action in Tesla was the exact fucking thing that we did when Inktomi would be up 20 points in a day on the first day, and you would just have these melt ups of buyers, just short squeezes to the end. I'm like, how could you possibly say it's not the same time? It's exactly the same thing as what happened.
Of course, I completely agree. Like Virgin Galactic. And not only that, I think it's in some ways even scarier. Like things like Apple, a huge company, is trading like it's a .com, little stock.
Oh, yeah. Oh, so okay. Let me just take you back to Cisco, right? So the first $1 trillion quote unquote company that everybody thought was going to be a $1 trillion company was who? Cisco in 1999. Right. Remember that? That was the big, Cisco.
And it's nowhere near. It's nowhere near its high from 99. We were looking it up the other day on the desk. It's miles away still. Yeah,
not even close. And then Mr. Softy also did not. Under Steve Ballmer, I mean, the only reason Mr. Softy is doing really well is because they finally got a great CEO. But, basically Ballmer's whole tenure was literally an obliteration of shareholder value for like a decade that he was chairman. It's just a perfect example of how 90% of the people in the world are there because they're lucky, not because they're good. I mean, Ballmer was originally hired as a P&G dishwashing salesman or whatever the fuck it was that was his job. And if he didn't happen to be a roommate of Gates's, that's exactly what he would be. That's exactly what he would be. His talent is perfectly suited for being that, for selling Tide to people.
But Boris, that reminds me of the line. It says some people are lucky enough to be born smart, and then there's others who are smart enough to be born lucky.
Yes.
So the .com crash comes, and then
Bear is my philosopher. He always said, I'd rather be lucky than good, and that's always a great motto. Yeah. Go ahead. Sorry.
No problem. So the .com crash comes, and not only that, it's also thereafter followed by 9/11. Which, you being a New Yorker is obviously, is traumatic for everyone, but especially traumatic for the New Yorkers. So why don't you tell us about how that kind of brought about the next change in your life?
So, obviously it's still really painful to talk about that. And I don't really want to talk about it. It was a very dark time for everybody in the city, very, very tough time. I was very, very lucky not to have lost any close relatives or friends, although I know a lot of people who did. I have two older kids who are like 26 and 25 now. And those kids were tiny at the time. They were like, I guess 4 and 5, whatever they were. And we were at I don't know if you guys remember the world. There was a restaurant called Windows of the World, which was the restaurant on top of the World Trade Center.
Right.
And I was literally there with the kids the week before. So there's just, anybody in New York who lived in 2001 is just 1 degree of separation from, talk about being lucky, of just really avoiding calamity. So it was a very tough time, but it was also obviously, of course, the complete collapse of the tech bubble. I always love to give this statistic. I said that during the course of our run, when we were doing headhunting for all these tech executives, I had negotiated close to $50 million worth of stock option, valuation grants to all the various people that I represented. And out of that, one guy cashed out. And everyone else
let it ride.
Everybody else wrote it down to a bagel, because that's the thing. This is why I hate if you bought Netflix on the IPO, you would be a millionaire today. You would never, ever, ever, unless you were dead or you didn't know you owned Netflix, you'd never hold Netflix. The point is, people don't. These are all false narratives at how behavior works in real life, and it works the other way around. People who have $1 million, they think they're going to go to 10, and it usually always goes down to 0. So yeah, I mean, that was it. So what happened after that was kind of like, I basically started, I was day trading a little bit for myself and kind of just, trying to figure out what I was going to do next. And there was this magazine called Stocks, Futures, Options. I don't know if you guys remember that magazine. It was like a big glossy magazine, like in the early aughts.
I remember. Yeah.
They came out, right? And there was somebody wrote an article about option trading, right? And I was like, this is the biggest bunch of shit I've ever read. Like, it was like literally every point in that article was 100% wrong, right? And I don't know what compelled me. I just picked up the phone and I called up and I got the editor online. I said, this article is full of shit. Like, this guy is completely wrong about, how you price it, what you should be doing, like, with how, you should be, price is the single most important variable in Patrick, I don't have to tell Patrick this, in buying options, like, it doesn't matter how good your thesis is. If you overpay for the option, you have zero chance of making any money on it. And she's like listening to this, and she goes, okay, smart ass, you think you're so good? You write me the article. Literally just like off the phone. I go, really? Okay. I said, okay. So, so then basically what I did is I just kind of wrote I forgot what my first piece for her was. I wrote the article. It's like a 2,500 word article. And, she publishes it. And like, I get this phone call and she goes, what are you doing for me next? I'm like, next? I didn't realize I was working for you. I'm like, you asked me to do this. I did this as a favor. She goes, no, I want next. So bottom line is I kind of just started writing, articles on trading. And at that time, FXCM, which used to be the largest retail broker in the world, right, was just starting out. This is again all about me being the Zelig of the world, just bouncing from one bubble to the next, right? I knew nothing about Forex. Remember, my one touch with Forex was rejecting the Forex dealing desk at the Fed in 1982, right? I knew nothing about that market. Like the first thing that just shocked me was like, you mean you can't make bid ask? Because in Forex, it's a dealer's market. It's not an exchange based market. So you basically have to pay, offer, and sell at the bid. And I was like, you mean you can't make bid ask? What kind of bullshit market is this? I don't even want to touch it. But they had put an ad in the paper saying, hey, if you know about markets, we're looking for people to kind of who can educate people about markets. And I came in just completely oblivious. And the reason why it attracted me was because it was an overnight gig. And I was like, oh, great. Maybe I'll work overnight and I'll day trade indices during the day. Right. That was like my great idea. And I came in and literally I stayed there for 6 hours. Like everybody interviewed me. I felt like, like I was being interrogated by the CIA. And on that, right then and there, they said to me, okay, we want you to work for us. And I was like, what are you talking about? And I'm like, okay, I'll give it a shot because it was basically, I took it because it was an overnight gig. And that happened to have been literally the greatest startup. Like, if you talk about a hockey growth stick, like when I started with them, we had like one quarter of a floor. And within 6 months, we were like at a half floor. Within a year, we were like at full floor. Within 2 years, we were at 3 floors. I mean, like full New York City office building floors, And because I had an economics background and because the Forex market is at that time actually cared about economics, because the Forex market at that time wasn't completely and totally destroyed by central bank intervention. It was easy to understand it. It was relatively easy to trade it, and it was a lot of fun, and I really got into it. And that's basically how I just, got back into finance and been doing that for the last 20 years. So that's my crazy story.
Well, that's awesome. So let's take that opportunity to talk a little bit about the markets. Now, you've already kind of alluded to the fact that central banks have taken the stuffing out of foreign exchange markets, and I know you noticed, you kind of, when we were talking earlier, spoke about the fact that we are at all-time lows on the volatility. Why don't we talk a little bit about that and how anyone can make any money in this kind of low vol environment, and is this going to change anytime soon?
That is literally, the $64 trillion question, right? I mean, we just did our 2020 outlook. So I did a lot of kind of background research and I've been, I'm very active on Twitter and I follow everybody and I listen to everybody and I listen to everybody's opinions. And the universal view of everybody who's in the markets is that rates are going nowhere, right? That there is zero chance that we have any rise in rates, which kind of makes me think that that's probably going to be the unexpected event of the next year. But what we have seen for the last decade, and that is just, I think, reaching its absolute absurdity at this point, is complete and total suppression of rates, which in turn is a suppression of volatility, right? I mean, literally, if interest rates are zero, there's very little reason for things to move up and down because it doesn't matter, right? It's not going to have any impact on the asset because there's zero chance the asset is going to yield higher if the central bank keeps the rates at zero continuously. It's like we're all. I've been having the thesis that we're turning Japanese for the last 10 years. but I feel like, we're really turning Japanese at this point in 100 different ways, demographically, socially, and monetarily. I don't have a crystal ball as to how it ends, but the one thing that I do find interesting is that literally you cannot find me a single human being who thinks we're going to be at 3% inflation, 3.5% on a 10-year by the end of this year.
Well, you're on the air with
Boris,
one of those.
Boris, I am the world's biggest inflation bull and bond bear. So you probably have found the one person that thinks you're low, but that's the story for another day.
But
He's a fool, though, right, Boris?
Kevin, that literally there's no talking head anywhere. That I just listened to Gunluck's double line. And really intelligent, really interesting insights, some beautifully interesting, bear arguments, bull arguments. Not a single person on that panel thought we had a chance of even a basis point rise in a 10-year.
Yeah, I completely agree with you.
And I completely disagree. But then,
yeah, I know. The other thing I think is interesting, Boris, is that I've said this before. Way back when Trump didn't understand his power to affect trade, tariffs. And I remember Kyle Bass being on CNBC, or maybe it was Real Vision, and he said something to the effect of, "Don't make sure, watch out if he figures it out, there's going to be hell to pay." I think one of these days he's going to figure out the power he wields in the Treasury with the foreign exchange, and I think you're going to start to see more intervention, or at least kind of.
You think he's going to force the Treasury to sell a dollar? That we haven't done that in God knows how long. I forgot. We went the other way. Was it Plaza Accord, right? Since we haven't done that. I mean, it's been
a long time. But you remember, well, maybe you weren't trading then, but I remember when the Bank of Japan used to come in and regularly intervene in the markets.
Yeah, that lasted for what, 48 seconds? I mean, it was.
No. There was a period where it was actually. Not only that, when you want to send your currency down, you have the ability, if you want to. And I realize there's all sorts of technical barriers, but let's face it, if they figure out ways around this, sending your currency down is a lot easier than setting it up, because you have the ability to create as much supply as you want if you're willing to live with the inflation.
That's for sure, right? But but the Bank of Japan story is kind of informative because, well, they sanitized a lot of it, so I guess
exactly they sterilized it, so therefore it wasn't effective.
So it didn't quite have the inflationary impact that they wanted to have, because they're obviously scared of it. But Trump is like a 2-year-old with an Uzi submachine gun. He's just whatever he's going to find next, he's going to pray and spray. So we'll see. But yeah, go ahead.
Sorry, let's just you mentioned earlier that your partner has managed to figure out a way to trade this low vol environment.
Yeah.
Why don't you tell me what she does and kind of give us our listeners some hints of how you actually adapt to this environment?
So it's very interesting. So this is her process, right? I'm basically, it's very hard for me to be a continuation trader, right? I am naturally, and this is a weakness of mine. This is not a strength. I don't consider that to be a great strength. It's very hard for me to buy highs, sell lows, right? I'm always trying to be I basically have market making instincts. I'm always trying to be on the opposite side of the trade, right? She, on the other hand, is first of all very, very comfortable being a continuation trader, right? So what she does, though, that I think is super interesting is she's excellent at sort of big macro fundamental readings. Her process is the following. She needs to have macro fundamental support. So I don't know, let's just take an example of I don't know, the Bank of Canada, right? Bank of Canada, the data has been a little bit weak, but the Bank of Canada was very, very dovish, right? So that makes the loonie pretty much a sell. She has a fundamental view, but she doesn't move on it until she has a technical confirmation that there is weakness in the currency. But what makes her so good, that sounds super easy. You have a technical view, you have a fundamental view that confirms the other. What she's really, really good at, and this is where she's been really making things, is she is utterly and completely not greedy. If it moves by a pip, but I'm exaggerating if it doesn't move by a pip, but if it moves, let's say, 20 basis points in her direction, she will bank some of the profit and then ride the rest of the trade to break even. So what happens is huge amount of moves in the FX market are tiny, right? And people don't, people are waiting for that big move, which never happens, and you get lots of retraces and you get stopped out. She basically just like a pigeon, just takes tiny little dips all the time and builds at that pace, basically on a pace of doing 400 basis points a month, literally 20 basis points at a time. It's right. It is not easy. It is hard work, but it's incredibly consistent. And I give her all the props for doing that because it requires a lot of discipline, a lot of integration of both technical and fundamental skills. But most importantly, the critical thing in this market is like an ice cube. It will melt in your hand if you don't use it. You have to think of it as like a weekly option. You're gonna get burned unless you get rid of it right away. And that's really the story. It's also a very market making market, right? I mean, HFTs are running everything, and the primary way they make money is just essentially selling highs, buying lows. So they're by definition going to be only allowing very, very limited moves before they move the other way, so they can stop people out and take the money the other way, right? And they can do that because there really is no uniform directionality, right? So one of the reasons why the markets are so depressed is the single greatest driver of the Forex market is interest rates, correct? So if you have a rise in it, the single way we used to be nice in the olden days, the single biggest trade in the world, macro trade, was the carry trade, which is you go long a currency with a high yield, short a currency with a low yield, and you hope that the currency with a high yield has an expansionary yield, and you get a spread on the yield and hopefully capital appreciation both on the currency cross and the interest rates, right? Well, you take away the idea that anybody ever is raising interest rates, right? You take away the reason for currencies to move. And that's why you have such low volatility. And so you have to just take whatever tiny little moves HFTs allow you within the little tiny parameters that we work with right now. And she's been very good at doing that. So I think that's kind of like the way to survive in this market.
Well,
okay,
Boris,
so let's. Oh, sorry, Patrick.
Yeah, I was going to say, so you're talking about Kathy, of course, your partner, right?
Yeah, I am.
But how do you trade? So let's go and dive in this, because obviously you talk about macro, which is always an important backdrop to put onto your trade. But how much of your trades are longer term positioning or swing trades, or how much of it is more intraday day trading? How do you define yourself as a trader?
So. In case it's not completely obvious, I have the attention span of a gnat, and a swing trade. A swing trade in my lexicon is 1 hour. She swings. Her holding period is, 12 to 48 hours, 72 hours. 72 hours is the maximum she's probably going to be holding positions. My holding period is 1 to 3 hours. But I have my latest thing. My sweet spot, what I absolutely love doing, and is, this is the interesting thing about trading. First of all, trading, I think, as we all know, requires you to have an open mind all the time, and the ability to be willing to fail at any given day and try a million different things, right? Because markets change, regimes change, everything changes, and what I am kind of just like a fish to water. Found to be really, really successful for me right now is relative strength trading. I'm basically, first of all, I've moved myself strictly to trading equity indices at this point because we're subdividing our portfolio looks for our clients. But within that span, my biggest macro view of the year, but also my day trading kind of slant is I like to trade the S&P or the Dow against the NASDAQ because, the NASDAQ has obviously been such a massive outperformer. against the Dow. Now, if you look at it from a super long-term point of view, like a 10-year chart, Eddie Effelbein, who we all follow on Twitter, is just an absolutely great guy, had posted this chart a while back, and that was just kind of what opened up my eyes. I bet most people do not realize. They all think everybody thinks the U.S. stock market is uniform, but the difference between the performance of the Dow and NASDAQ is literally 250% over the decade. Like, I think that kind of disparity is historically unheard of. We've never had that kind of disparity between indices, especially ones that essentially have the same, more or less the same asset classes. And of course, the reason is because FANGs have just completely, pulled away into ridiculous territory. So I think from a long-term point of view, even if the market does not go down, which it very well may not, I still think the most interesting trade right now is the mean reversion between the Dow and the NASDAQ. I think even if things correct just a little bit, the NASDAQ is going to fall harder than the Dow will. And being short NASDAQ, long Dow on a long macro thesis is, I think, an intelligent trade to do this. Now, I do this trade depending on, on a day trading basis, it's obviously, completely different. Like this whole month, the trade has been long NASDAQ, short Dow. Because NASDAQ is just, every morning you just, you look in the European session, we're 10, 20 basis points higher, and they're going to just run it away. And it's just been a continuous trade up, except for today when, finally all of the shorts had their prayers answered. And you saw today was the first big day where the NASDAQ broke hard, right? Broke hard. Now, is this yet another of a million fake outs? We've all, anybody who watches equity indices knows, literally, the most predictable thing in the world is 3:30 in the afternoon, New York time. You're just going to get a bid in NASDAQ. They just relentless bid to the upside. It doesn't matter where we're at. We're just going to go higher, right? The key question is when that pattern breaks, like when that no longer works, that's going to be the time when the NASDAQ finally starts to give ground. And I think it's going to be a massive underperformer against the much more stable old line blue chips like in the Dow. So
right, and Boris, you were talking about a new product that makes this easier for retail to get involved with the minis. Why don't you walk us through how this kind of has opened up for more retail investors?
This is a wonderful, if you want to speculate without losing your whole bankroll and participate in the markets on the exact same level, with the exact same execution, with the exact same performance as the big boys, without having to risk your whole 401k retirement plan. There's a new product that Chicago Mercantile Exchange introduced. And disclosure, I do commentary for Chicago CME, but I'm completely, I'm not humping them. But this has been their most successful product they've ever introduced, and it's called the E-mini Micro. So everybody's pretty much familiar with the E-mini S&P, E-mini NASDAQ, E-mini Dow. Those are the futures that trade. Yeah. The problem is the 10-year bull market has turned the E-mini into the E-macro, into the E-maxi. They have become so expensive. A single contract requires like $8,000-9,000 to hold overnight on a margin basis, right? So last year, the CME said, hey, why don't we chop this up by a 10th? And create the exact same contract, exact same pricing, essentially pretty much the exact same liquidity. But you only need like $800 to hold it. And the day margin, this is the key thing, the day margin is only $50. So literally, if you wanted to just have fun, you could open an account with $1,000 and trade the S&P or NASDAQ or Dow. But I guarantee you will lose that $1,000 in 1 week straight if you make directional bets, right? Because no matter how lucky you are, this is the most
gambler's ruin.
It's also the most. This is the greatest poker market in the world, right? The market. Anybody who trades the equity market knows its single greatest function is to sort of entice you into making the wrong move, right? Just when it looks absolutely the greatest, that's the fall. Just when it looks absolutely the worst, that's the bottom. Just when you think it's the bottom, it's going to go down deeper and take you out again. Like it is so hard to make directional trades in the equity market on a consistent long-term basis. Not impossible.
It's easy.
Really,
you just have to get Costanza as your friend, right? Like you just have...
exactly. Yeah, exactly. You do the exact opposite. But even that doesn't like even that, like that's the thing. The market is so smart. It even can out Costanza. But what I do and what I find to be so much less stressful and frankly so much more intelligent is to make these relative strength bets. So I'll give you an example. So today was a day where there's basically four primary indices in the stock market. There's the S&P, the NASDAQ, the Dow, and the Russell 2000, the RET, right? So the Russell 2000 today was the dog of the dogs. It was the weakest, before the market opened, and it just stayed that way, right? And the Dow was the strongest. Now, there's a reason. One of the other reasons is that it also is actually eminently understandable why sometimes things are stronger and weaker. We had great earnings from Intel. Intel is a huge piece of the Dow, so it had relative strength, right? So all I did all day long today was get long Dow, short Russell, long Dow, short Russell, long Dow, short Russell, and occasionally just to make it a little more interesting, I get long Dow, short Nasdaq because the Nasdaq was kind of the second weakest as the day wore on, right? Now the difference between doing it this way is that I guarantee you, if you trade one contract, even if you trade one little mini contract directionally with that $1,000, within a week you'll burn all your money. But even if you are wrong, even if you were like, let's say, long Russell, if you thought, the small caps are going to rally and the Dow is going to fall, even if you were the reverse of me on a one contract trade, your chances of blowing up 1,000 in a week are almost minimal because you're not going to make a lot of money, but the ability to stay in the game, it goes from minutes to days. You can literally, you can let these trades sometimes go because the worst they'll go against you is maybe $100, $200, before the spread comes back in. Remember, intrinsically, these are relatively same assets. So if you're long one, short the other, it's not a unidirectional trade. And what that allows you to do is, first of all, give you breath, right? You're not in a constant panic mode. Oh my God, it's 10 points against me. I don't know what to do. Should I get out? Should I add? Should I do all this stuff? Right? It allows you to have a cooler head. And secondly, it's much easier, in my opinion, to predict relative strength than to predict directionality. So that's been my strategy, and I love it. And that's what's working. So that's what we do all day long.
Well, that's terrific, Boris. So, we're at that point where we're going to wrap up. But one of the things I kind of often like to ask our guests is if we went back and talked to the Boris of 30 years ago, or actually it might have even been longer than 30 years ago, when you were at Columbia and there was a body getting unrolled from the carpet, and
yes.
knowing what you know now, what would you tell that young Boris?
Get long the index. I mean, seriously. Either that or just buy bonds. I mean, really, every boomer who's ever lived, who's now retiring multimillionaire, they're just the luckiest bastards that ever lived. It's been the greatest bull market in the history of our life. So that's I don't need to. I don't need to buy plastics. I don't need to invest into Google. That would have been the one trade. But unfortunately, none of us are that smart. But what I would say as far as life skills is, learn how to survive. It's success is always different. We all know, like, every different market creates different success parameters, and the reason, and it's actually interesting. You see how there are almost nobody, except for George Soros, who's amazing. There's literally nobody who is successful now who was successful 10 years ago, who was successful 20 years ago, right? Name me any hedge fund manager.
Well, Druckenmiller too, but the two of them are probably the only ones.
But they're kind of intertwined, right? Yeah. And even Druckenmiller kind of gave up for a little while there for, let's see. But yeah. So my point is that and the reason, by the way, why Soros and actually Druckenmiller are so good is because they always put a premium on surviving, right? And I think that's the key thing. If you're trading in the marketplaces, remember the survival is first, results are second. You can't have results without surviving. So if I was going to talk to my young self, it would be don't do stupid things. Like.
That's a good advice. I'm going to tell that one to my kids. Don't do stupid things.
Exactly. Like 90% of life is showing up and not doing stupid. You don't have to be brilliant. You just have to be not stupid. And that's actually really hard because most of us are unbelievably stupid all the time. So, working on that is good enough.
I can definitely speak for Patrick and I that not being stupid is very difficult for us. Boris, it's been a pleasure having you on. Why don't you tell people where they can find more about you, how they can follow you on Twitter and all that other good stuff?
Absolutely. You can follow me on Twitter at FXFlow, FXFLOW. And by the way, what's cool about that is if you go to Twitter and you go to my profile, the pinned tweet, the tweet that is pinned to the top of my feed is our 2020 outlook. So if you guys want to take a look at some of the interesting trades, and I actually I'm probably very simpatico with Patrick on a lot of my macro trade ideas this year. So it'll be interesting to see. I'll just if you guys want to know, just sort of like this is my throwaway idea as this kind of a safe, interesting idea. Newmont Mining, right? So nice. I think I'm long. I think everybody's kind of understands that gold has a chance here to go to 2000, right? But we never know. We never know when or how. And it's for regular people, it's very hard to trade it speculatively. So Newmont Mining, obviously, we all know that if gold goes 2000, the miners always go 5x whatever the metal does because of this huge leverage to their earnings. But Newmont Mining is a 2.5% dividend, and it's part of the S&P 500, so it's part of the index. So the index buyers will be forced to buy it the bigger it gets. So to me, that's kind of a really interesting sort of a simple, easy way to participate in potentially a big trend coming up. So
and it broke out to new highs today.
There you go.
Yes, it did.
There you go.
See, I already sound like a genius, but if you guys want to watch all those ideas, the video is right up there on the pinned tweet. So that's why you should come see me on FX Flow. And if you want to just check out what we do, it's BKForex.com, BKForex.com. Even though I no longer do forex, I'm just basically trading equity indexes all day long. So you can come in and do crazy stuff with me if you want. And that's pretty much it.
Well, that's awesome.
Well, thank you so much, Boris. It's a real pleasure having you on. And I don't know if anyone's going to beat the story about the body in the carpet.
The body in the carpet. That's classic. Classic.
Thanks a lot, Boris. It was great having you on, bud.
Take care, guys. Bye-bye.
Bye-bye.
All right, cheers. Kev.
Oh, are you there?
Yeah. Where are you?
I'm here. You can just leave this in, Lena. Okay, let's go. What are we doing? What section are we at here?
Well,
talking charts. Okay, here we go. Talking charts with Patrick. What do you got for us, bud?
All right, let's talk some charts, bud. All right, you know what? I wanted to just start off with the S&P 500, right? And and we'll get to some individual stocks after this. So what I wanted to do is just highlight the fact that there's an interesting level just below on the S&P 500. It's all around the 3,250 level. It's where the Fibonacci retracement zones are. It's where the consolidation lies. It's where the gamma flip that when Brent was on the show just the other week, he was talking about the gamma flip levels. And it's also the trend line along the bottom of this channel that's been running the stock market. Now, I'm not trying to predict that the S&P will break through it, but actually this is an important support line. And even though today seemed like a really big sell day, we've seen a lot of times where one of these sell-offs come in for 1 or 2 days, almost immediately pause, reverse, and then rally again. And so what I was just going to say is that even if we get a 20 or 30 S&P point down start on Monday morning, if the buyers come in quickly and buy the dip and rip it right back up, then it may not yet be the beginning of the floodgates opening. I think we have to cross decisively below 3250. The gamma flip kicks in, and the selling and volatility could really accelerate below there. And I just wanted to highlight the kind of pivot level where we could watch on that S&P.
That's some good stuff, Patrick. If it goes lower, you'll sell it, and if it goes higher,
God, I'm not saying that's. Oh my.
Okay. Anyways, let's go on to the next chart. Let's go to the next chart.
You're
I'm just giving you a hard time.
All right.
That's actually Patrick. 1 second. I should be honest.
Oh no, you shouldn't be honest. Don't be honest. Just stop. So now. I wanted to just go back to Costco. A couple weeks ago, we highlighted this gap, right? That gap that it happened higher, and I was talking about that those gaps often are the tell, because either A, they're going to draw in a technical signal that causes traders to chase the market higher, or it becomes the fake out that opens the floodgate. And as you can see, the buyers on Costco not only held the line on the gap, but then used that as a pole to go higher. So this chart actually is a legit breakout on Costco, especially now at 52-week highs. I thought that was interesting. The other one that I wanted to circle back to was Boeing. We talked about the other week, and it didn't take long for that break to happen, right? Now, we obviously had a bounce just over the last couple of days, but that breakdown towards those previous lows really happened pretty quick after we talked about it. I don't know how bearish I am on Boeing in terms of the further downside, but the price action continues to look like shit. There is at least nothing bullish yet to say about what Boeing is doing, right?
I don't know, Patrick. It might be a reverse prairie dog. Watch for it. I don't know what that would be called.
Is that your intuition? Is that what you're feeling?
I don't know. You know what? I was pretty bearish, and I was kind of surprised these past couple of days. Maybe it was with Phil LeBeau on CNBC all day hyping the plane, but they managed to get it up today on some good news. It almost feels like it might be washed out. At least I'll tell you this, Patrick. On a relative basis, I think there's probably better shorts out there.
All right, I'm not going to disagree with that. So what I wanted to do is let's just actually circle back to the charts that Boris was mentioning. He talked about Newmont, so I figured we might as well pull it up. And you were saying there that it broke to a higher high. And I just thought that was really going to be interesting to watch whether or not Newmont is going to run here. I mean, gold seems to be doing okay. I mean, we're at $15.71, up like $6 here on bullion. But this breakout, is this the start of a new advance in Newmont? The measured move easily could be towards $48 to $50 on the upside if this thing gets running. So it's definitely one on the radar to see whether this breakout sticks. The other one that Boris was talking about was Intel, and what a gap this morning, eh?
Yeah, it's crazy, like crazy stock.
Big earnings gap. For me, though, I'm a little hesitant here, because the way that I do technical analysis, I'm doing all sorts of measured moves. This gap higher has already completed a lot of targets on the upside. I would not be surprised if Intel backfills this move. Now, I'm not trying to say downtrend. I'm not trying to say short, but I would not be surprised if you have an opportunity to buy the dip on a pullback to 66 or 65 on this in the coming days. I think
it looks like one of those flying hangman dodgy things, I think, Bob.
Don't even try it. Don't even try. I'm not saying anything else. Thank you for your comment, Kev. So the thingamabobber up at the top there. All right. Anyway,
flying hangman. It's a flying hangman. I'm pretty sure it is.
Yeah. So what was the other thing that I thought was really interesting was today's reversal in the healthcare space. That was a pretty big red slam candle. I mean, healthcare's. We talked actually about healthcare many months ago about whether it was going to be a potential reversal and breakout, and it's been really one of the strong sectors within the space. And this sell-off that happened today was probably the single hardest sell day we've seen in 3 months. And
I think it was because, by the way, I don't want to let fundamentals get in the way of you.
No, please
charts.
don't.
But I will tell you that I think it was basically on the news that Bernie is looking neck and neck with Trump, or at the very least increasing it, as the percentage or the odds favor that Bernie is going to stand a chance of winning. They're slamming the healthcare.
There you go. And what's interesting is that some of the components, like Bristol Myers, had a pretty hard sell day. It's been one of the hot pharmas on the way up. And it's a big sell day today. But even the biotechs, like you look at Amgen, which has had a huge run to the upside.
That's an ugly looking chart.
Ugly chart, right? Like it looked like it was ready to break out and just gets heavily hit on the downside. So I'm not trying to already call the short on the space, but there's some pretty significant reversal candles here that make this a priority watch next week just to see how it plays out.
All the dark art magicians are going to come out
absolutely
and be selling that hard. Yeah.
And so the last thing though that I want to just touch on is, and something me and you have talked about quite a bit, is the idea of as to whether or not the reflation trade itself is dead. And one of the interesting things that I'm keeping an eye on, this is the euro, just as kind of get a gauge on the biggest cross against the U.S. dollar, right? And it's to me, this price action did a lot of damage in the last month. It really shows that the bull trend that could have had developed on the euro to give you and Cuppy a free steak dinner down in Miami really took a heavy blow here in the last week.
I think that euro trade went along with all of Cuppy's other trades that had some trouble. It's okay, Cuppy. I'm winning most of them with you, so don't worry. I'm not making funny. I'm just saying that, that they were all correlated more than you thought.
Well,
I thought the correlation was not zero, but it really was one. Unfortunately.
I was also in a number of Cuppy's trades that are going against me, but at least I might get a steak dinner out of this. So I'm on the other side. I've got a
Patrick,
hedge. I've got the hedge.
I will give you this. You know, we did talk about earlier today. You and I had a chat offline about the reflation trade, and Patrick, you're gonna be worried about this. But for the first time in a long while, I don't feel like it's right to be short bonds, which is about as bullish as I get.
Love it. Love it.
I just think that
we went long. We went long a big picture.
That's good. Good for you guys, because it's been a great week, right? Like it's been terrific. One of the things that I will say is that you have the second largest economy in the world put half of their citizens on lockdown, and if you don't think that there's going to be an economic slowdown, you're dreaming, because it's coming. And then the next thing is, even more importantly than whether there is an economic slowdown or not, it's what's priced in. This is happening at the very instance that all of those hedge funds and fast money guys were basically setting up their positioning to have the reflation trade on. They're going to have the exact wrong trade on as this thing rolls over if this continues. And I actually, I'm surprised that we haven't seen worse. And I think that probably one of the best ways to play a continuation of problems with this virus is long fixed income.
Yeah.
You know what? And that's terrible for me to say, Patrick. Like, I kind of threw up in my mouth when I said it a little bit. But
I have a little I have a little fun bond story. That's hot off the press. So my 14-year-old son Ethan, I opened him up a little CFD trading account so he can screw around with $1,000 in there. And I told him to go long bonds a couple days ago. He doesn't even know what bonds are as opposed to anything. So he put it on, and he texts me while we're recording this show. And he's like, I'm up like $300 on my bonds. Should I take my profits? He doesn't realize that the markets are closed for the weekend. I'm like, go ahead. Go ahead. You know, like...
Hey, listen, he's not even a millennial. He's the next generation. They're used to trading Bitcoin, which trades 24 hours. He's probably like, why can't I trade?
I don't know.
What the hell?
He's like saying, like, this is bullshit, right? Like
exactly.
Anyway, so the other chart, last chart, and then we're going on.
Okay.
Look at that crude oil chart. Like, if you ever needed a nail in the coffin in a reflation trade dying, like, is crude oil, like, look, I was talking for the last 2-3 weeks that 57, 58 has to hold on crude in order for there to be a chance for the bulls to take another advance. They're just killing it. They're like, this is an outright rout in oil. And that's just not a good sign. Not for the bigger reflation trade. Certainly a bonus for the bond trade bulls, right? So
yeah, I completely agree. One of the things I will tell you though, Patrick, is I think that oil has ended up being the kind of the punching bag for when people want to bet on the economy going lower. And I suspect that either oil has got to stop going down or the stock market's got to catch up to it. One of the two is off.
Yes.
That's what I think. Anyways,
Well, we'll
great
find
stuff,
out.
Patrick. Thanks for talking
All right.
charts. Okay, let me do a better job on this one, Patrick. What do you have for this week in trading history?
You asked that so nicely. What do you have? Okay, so a great story. A great story for us. I want to go back to late January of 1920 for the start of the infamous corner on the Stutz Motor Company. And so our protagonist was Alan Ryan at the time, who was mentored by his father, a famous industrialist, Thomas Ryan, who turned over his seat at the stock exchange to Alan at the age of 35. In addition to his father tutoring him on the intricacies of finance, his father's good friend Charles Schwab, the famous president of United States Steel and later Bethlehem Steel, took him on as a protege. By the way, I want to emphasize, I actually took a little research. That's not the Charles Schwab of the brokerage
Come on.
thing. No, it's a different Charles Schwab.
It was a different Chucky.
Yeah, the Charles Schwab that from the brokerage side was from the 1970s. This is from the 1920s.
But it wasn't the same family? It wasn't related at
I
all?
do not know whether or not they're from the same family. And if any of our listeners know that answer, you can let me know. But this is a different Charles Schwab. He was the steel magnate from of Bethlehem Steel from back in then. He was still a big player, but not from the brokerage side. So anyway, still a huge industrialist, right? And so Alan Ryan started his firm, Alan A. Ryan and Company, and became forces to be reckoned with on Wall Street, known for his powerful, clever bull operator, and particularly adept to the delicate yet brutal art of squeezing short sellers. Squeezing them, right? So he operated in many industrial sectors like oil, textiles, chemicals, manufacturing tools, but his biggest investment was in the Stutz Motor Car Company of America. So I have some pictures here of the sports car on our YouTube channel here. And their most famous car is the famous Bearcat, which was like a sports car and as well as a famous like luxury car back then.
Wasn't that a comedian from the 1980s?
I have no idea.
See, you don't even get my jokes. Okay, go on.
Yeah.
Go on.
So anyway, at the beginning of 1920, as a 40-year-old man, he caught influenza and was hospitalized for 2 weeks. And during his hospitalization, the stock of the Stutz Motor Car Company there was doing very well. It was at $100. It proceeded to go to $120 and then $134. And so while he's in the hospital, that was when Ryan discovered that there was organized short selling by speculators who thought the price had risen a little too high. So he said that this was a bear raid, and among the bear raiders were leading members of the stock exchange. And so, rising from his sickbed, he rushed back to Wall Street and prepared his big maneuver to squeeze the shorts.
Wow.
So his aim was to buy in all of the Stutz stock that was offered to tighten the noose on these shorts, who would eventually have to cover at much higher prices. So to conduct a campaign, Ryan needed enormous amounts of cash, and he got huge loans by collateralizing almost everything he owned. And so after losing a little bit of ground at first, he was able to turn the tide decisively. And so by a month to 6 weeks later, it was by March, that he got the Stutz stock up to about $245. A week later to $282. And then he rocketed it up to $391. So the squeeze was on. I don't know any car company that would do a short squeeze like that. And so...
Patrick, all I can sit is I'm sitting here listening to this, and I'm like, did you purposely pick something that has an analogy that's perfect to today? Even with the little flu virus, like it's perfect. It's got all elements of everything you'd expect today.
Isn't it amazing?
Yeah, it's amazing. And even the fact that he was leveraged to the hilt, and he needed to take out loans. There's a certain entrepreneur that needed to borrow against his Malibu house and his G5 or whatever, to make payroll.
It's amazing. It's amazing. So then it became clear that the short sellers seriously underestimated the strength of Alan Ryan. And so Ryan was in a position to know who most of these short sellers were, since he was the one loaning them the stock to short.
Nice. So did he pull it in?
So listen on. It goes on. So he was summoned to appear at the Exchange Business Conduct Committee to explain the gyration in the stock.
Right.
The irony was that many of the interrogators were among the short sellers.
Oh, bullshit. It's like a silver
exchange.
hunt. It's like the Hunts thing.
Exactly.
Same thing happened there.
Exactly. So during the meeting, he revealed the fact that he and his family now owned all of the shares of the stock. And then he goes on to say he named the terms by which he would settle the shorts, omitting to mention, of course, that those short sellers were sitting right in front of him. And he said he would fulfill their contracts at $750 a share.
Nice.
So Ryan had them cornered. Nevertheless, the short sellers dug themselves in deeper short, looking like a suicidal move, until it was revealed that the committee announced the unanimous vote to suspend the Stutz stock from trading. Nice. So the exchange freaking suspended the stock from trading completely on the exchange.
Oh my God! So what happened? Did they?
So a reporter called out the exchange saying that there was no precedent for this, and the stock exchange spokesman replied, "The stock exchange can pretty much do anything it wants,"
which is true. Right? You said your exchange. You said the rules.
Yeah. And so, thus deprived of a ready and liquid market, they attacked Ryan back by attacking his weak spot, these huge loans he made to pull off his maneuver. So now they flipped it, where Ryan now was in trouble because he needed that liquid market to carry all of these massive loans that he put out to create the squeeze. So the fight became a media craze of the time, the public entertainment in the financial circles. It reminds me a lot of the Ackman Herbalife story that we were all so enamored with over the last couple of years. So crowds would cluster around news tickers in the brokerage offices, watching the latest statements by Ryan or his enemies, greeted by cheers or boos. Ryan had trapped himself into a reformist and heroic role of the single-handed challenger of the integrity of the nation's most powerful institutions. And so in April, Ryan started his all-out offensive. He tendered his resignation as a tactical move at the exchange. So he resigned his seat at the exchange, which freed him from the discipline of the exchange rules. He then went and gave the media all the names of the stock exchange members that were short the stock. And so this just was a complete gong show. People were outraged by this and basically began talking about the legislative investigation occurring to consider the possibility of government regulation at state or federal level with the exchange. So we can actually argue that it was this event that started the process of putting regulators on and involved in the stock markets. So
wow, that is Patrick. That is such an uncanny story in terms of how
how it all came together.
Reminiscence of today's situation.
Exactly. So it gets even better. So the committee quietly...
Oh, sorry. I thought I was cutting you off.
No. It gets better. So the committee quietly capitulated and accepted the impartial mediation for negotiated settlement price, and it ended with with shorts offering Ryan $550 a share to cover the shorts, and Ryan accepted. So he started squeezing them at $100, and then and it looked like a victory for him. right? It looked like a victory. But the thing is, the exchange had a little devious thing. The Stutz Motor Company shares remained suspended. Now came the problem that without this stock exchange listing, the stock was not marketable, so he had no way to raise the cash to pay off his creditors. So while the shorts were settled, he made massive enemies on the exchange that suffered great humiliation and wanted to see him go down. So all summer, these banks pressed Ryan to return the loans. This was compounded by the fact it coincided with the collapse in the nation's economy, and all his other investments were all being completely starting to collapse at that time. So ultimately, the bankers closed in on him, forcing him into bankruptcy. So all of Ryan's enemies knew they finally had him at last, and that they could leave it to the banks to be the executioners. So his credit was ruined. This went on for 20 months. For what satisfaction it might bring him, this made him one of the greatest bankrupts in the nation's history. The irony was that through the bankruptcy, the shares of this Stutz Motor Company were auctioned off and bought by Guarantee Trust for $20 a share. And it was later revealed that they were acting on behalf of Charles Schwab, who bought the company at $20 a share. Nice. And ended up becoming the president of the company. So Ryan's bankruptcy occurred. His ruin by this short selling thing was basically the exchange got their revenge, and then, and obviously the exchange ruled supreme. So it was, what a great story, and I wanted to.
It really is.
I wanted to do a shout out to Flora's Wagon on Twitter, who actually brought this story to my attention, and so that's how I learned about it and featured it. So thanks a lot for sharing that. And if anyone wants to read more about the story, it's all from the excerpts from the book Once in Golconda. And so anyone who wants to learn more can pick up that book. But you know what? Wouldn't it be interesting to see whether something like this happened with Tesla?
Well, from your lips to God's ears. Okay, let's go on. Great story.
Yeah.
Thanks for sharing that with us.
No problem. All right, so let's get to the WTF clip of the week. Kev, what do you have in store for us?
Okay, so I was watching CNBC and all the kind of, I don't know how to say this politely, CEOs that are lecturing us are in Davos. And the Salesforce guy came on, and the Salesforce guy was telling us that he was at a funeral for capitalism. And I just couldn't help but think there's got to be a good mashup in there. And I went to the old tried and true Big Lebowski to make the mashup. So let's play it.
All right.
So you made a lot of headlines when you said capitalism as we know it is dead.
Hello, gentlemen. You are the bereaved?
Yeah, ma'am.
What do you mean?
Well, people have been asking me why am I wearing this black suit and black
You're in mourning?
tie, because I'm at a funeral for capitalism here in Davos, Sarah.
Francis Donnelly, pleased to meet you.
Jeff Lebowski.
Alter subject.
The dude actually is,
Excuse me?
oh, no.
Yes. I understand you're taking away the remains.
Yeah.
What exactly do you mean by that?
Well, capitalism is dead.
You know, you have...
What's this?
Yeah, that's for the urn?
Don't need it. We're scattering the ashes.
Yes. So we were informed. However, we must, of course, transmit the remains to you in a receptacle.
This is $180.
It is our most modestly priced receptacle.
Well, can you just,
$180?
They range up to $3,000.
Can't we just rent it from you? Yeah.
Sir, this is a mortuary, not a rental house.
have a public company, right?
Well, you know that capitalism is dead, and we are introducing a new capitalism here, a stakeholder capitalism, which is a more sustainable capitalism, a more equitable capitalism, a more fair, a more just capitalism. And it's not like the old capitalism, you know, is all about Milton Friedman. The business of business is money, money, money.
Scattering the fucking ashes. But just because we're bereaved doesn't make us saps.
Sir, please lower your voices.
Man, don't you have, something else we can put them in,
That is our most modestly priced receptacle.
God damn it!
And the new capitalism is, the new stakeholder capitalism is, business is the greatest platform for change.
Donnie was a good bowler and a good man. He was one of us. He was a man who loved the outdoors and bowling. And as a surfer, he explored the beaches of Southern California from La Jolla to Leo Carrillo and up to Pismo. He died as so many young men of his generation before his time. In your wisdom, Lord, you took him. As you took so many bright, flowering young men at Quezon, at Londoc, at Hill 364.
And
I've heard that before.
You have heard it before.
Really, you've been out front on this issue, and
Yes.
it seems like everybody else.
It's why I started my
catching up.
company 21 years ago.
I guess my question is, traditionally Wall Street and analysts and investors reward share buybacks, cutting costs, layoffs, needing guidance. I mean, these are all sort of short-term thinking. It goes against your long-term thinking. So how do you marry that and see this paradigm shift play out in the market?
And so, Theodore Donald Karabatsas, in accordance with what we think your dying wishes might well have been, we commit your final mortal remains to the bosom of the Pacific Ocean, which you loved so well. Good night, sweet prince. Oh shit, dude, I'm sorry.
That scene when the ashes don't even make it into the water and just end up all over him. That's like
all over the dude. That they just end up all over the dude. It's awesome. It's such a good movie, When you go back, it's one of those movies that when you go watch it, it gets better every time you watch it. I really think that. Now, Patrick, have you seen it?
Yeah.
Okay. I just think that Walter Sobchak, who is that character? The guy from Roseanne.
Oh.
I can't even remember the guy's name. Lena, hop on.
Are you talking about
Who's
John
the
Goodman?
character? John Goodman. There we go. Thanks, Lena. You know what, Lena? I don't even ask Patrick because I know he's going to be like, who? Like, I don't know.
I don't think
John-
you watched the
yeah.
movie, by the way.
Oh
I think
my
he's
God.
lying as well. I'm with you, Lena. I think he's faking it.
The dude. All right, whatever.
Okay. Well, anyways, John Goodman is just he's the best. And then there's the Jesus scene, and there's just it's such a good movie. I am such a fan, and I could watch that over and over again. It's so good. Anyways, I think it's probably one of the best, and that was a real fun mashup to do.
All right. That was really good, though. All right, let's go on, Kev. Top 3 things to watch next week. And so let's jump right into it. And how can we not keep an eye on Apple and Tesla earnings next week, right?
Yeah, it's going to be a big deal. Apple especially, I think, because let's face it.
Because the Tesla one won't matter?
I just think that Tesla is not nearly as big a company.
Well,
it doesn't set the tone for the rest of the market like Apple does.
So it's the 28th and 29th after the closing bells, right? So Apple on the 28th, Tesla on the 29th. It really could set the tone, right, for everything. And they've been the generals holding the flag at the front line, marching that battle forward. And look, the earnings could be good and they might go higher, but if these generals get sniped and the trend changes, that might be enough to change the psychological sentiment of the market, right?
Yeah, I completely agree. Now we saw Intel blow the doors off of
and that could happen,
earnings.
right? So
right. But Apple's a big stock, and it's gone, and it's gone from cheap to expensive, in my opinion. And I know that on a peg basis, it's cheap. Like I get it. You don't need to send me all your bull arguments, but when a company gets so large, it's difficult for it to continue growing. And yes, you might argue that it's managed to find a way, but I don't know. I'm a skeptic when it gets that big, I would be very. I don't know. I guess I would be very concerned about trying to get long Apple here because thinking that there's still good news ahead of it. But hey, what do I know? I'm not one of these analysts that seems to be leapfrogging each other and talking about $350, $400 Apple. Maybe it is. Boris talked about Cisco. Cisco went pretty, vertical in the last, year of the rally. So in '99. So maybe the same thing's going to happen here.
You never know. Wouldn't it be something if Apple hit a $2 trillion cap, just to kind of just make sure that it solidifies the title? Can you imagine? It was just a few years ago we wondered whether a company would ever hit a trill cap, and now we're talking about whether or not this thing's going for 2.
Well, there's like a handful of trillions, right?
Yeah.
Right. There's who are
Amazon.
They?
Amazon. Microsoft isn't yet. Is
Google, I think, is. Yeah. Google just hit. And Microsoft, I think it's.
Did Microsoft? I don't think Microsoft did.
No, I think it did.
All right, now I got to check because this is a big deal for me now. Hold on, let me just see. So, the Microsoft is drum roll. Yeah, no, it totally is. Yeah. It's 1.26. Never mind.
Yeah,
I'm totally wrong. That's not a surprise. Okay, so then I'm wrong. All right, so number 2.
There's a handful.
Kev,
so number 2.
The Fed meeting. What are you watching on the Fed? Do you think it's going to be a nothing burger, or you think that they actually are going to say something that's going to move the market?
So I have up until since the great 2009. When was it? When the Christmas massacre? I guess it was 18, right? When he finally relaxed his stuff and kind of gave in to Trump and Wall Street. I have operated under the belief that Powell is going to continue doing whatever he can to stay out of the headlines, and that he's not going to rock the boat. And that has worked really well for me. I've just kind of, every time I thought about what will he do, I just said, he's going to do whatever it takes to make sure that he's not a headline. I don't know. Right. I still think at his heart that he is worried about the excesses in the financial markets. I think he wants to see the speculation die down, but unfortunately, he can't have it both ways. If he wants to let the economy run hot, he's going to have to live with the financial excesses that brings. And so it's kind of to come now and to try to talk down the market. I don't know. It would be kind of mopey, and it would be.
You don't think Trump would harp on him instantaneously if he?
I agree. That. So therefore, part of me is just saying, some people are speculating that he's going to come out and he's going to be hawkish and he's going to try to talk.
I think he's going to be just completely neutral. He's going to try to come in there and not move the needle. I agree.
So
I
agree.
The market what they want,
but So I agree. But now the one thing you might argue is that the market has expected a lot. Right. So even just kind of staying neutral might not be enough to satisfy them.
Right.
But I agree. He's been neutered. There's no doubt. Now, somebody else said to me that he's a rich guy and he doesn't want to end his career, stoking the largest bubble ever. There's a chance that he just says screw it and does what he thinks is right. And there's a return to the old Powell, which is, I still think that is the Powell. If he was left to his own devices, that's what he would do. I still think he would have interest rates higher. He does not want this. He is very worried about bubbles, and nobody's
okay. You could go on this rant. Just tell me right now: is he going to do it? You think that what's he going to do this next week? What's your feeling?
I think that he's going to err ever so slightly hawkish, but he's going to be more what you said. So he's going to try. He's going to try, and whether he accomplishes this or not, he's going to try to be neutral with a slight hawkish bit. Ever so slight. He's just going to step if he's on the 50-yard line, he's going to step on the 51-yard line.
Well, what I'll tell you. Well, here's my thing. Okay, so let's do number one, and let's put all three together because this is important. Because number one, we're obviously gonna watch whether or not that coronavirus escalates and whether the contagion really picks up or whether they contain this thing. But if you really look at it, there are three things. On our top three that all generally are landmines that if one of them is properly set off could turn the tide on a market that's way overextended on the upside. Maybe the market can avoid the landmines and be able to navigate through it. But these are landmines. If one of these gets triggered, the market is way overdue, right?
Yeah, for sure. And you were talking about those gamma levels. If we get a situation where we go through the long gamma and get to the short gamma portion, especially with the VIX so low,
200 S&P points can happen faster than you blink.
Patrick, we're setting up. I see all the kind of the VIX specialists talking about the fact that the curve is as flat as it's been since the February 2018 incident. And I think the January 15, I can't remember, there was another incident. But a lot of the kind of smarter people I know in kind of volatility land have been kind of, giving out the warning signs and telling you that you should be careful. And I think that owning VIX, and obviously today it rallied, but I still think that it's probably one of the better trades. I think it's a better trade than shorting outright because I worry about it's difficult. Yeah. It's more difficult to run the short S&P position or the short NASDAQ position because the swings are so violent. And maybe this is a situation as well where you love to use options and stuff. I think that buying, vol, whether it be a straddle or a strangle or just, doing something of that nature where you're long premium against volatility expanding from here is probably a good trade.
Oh, look, it definitely can last multiple more weeks, but at some point, the day of reckoning's ahead of the market. And the higher it goes, it's just going to create more volatility when it reverses, right? And so it's going to be it's a very interesting time in the market. I can't think of a better time for people to be Market Huddle listeners, right? It's
for sure.
We're gonna do the week by week, play by play here on the Huddle.
All right. If it's a day ending in Y, it's a good day to be a Market Huddle listener. Okay, so on that note, why don't we go to the Market Huddle wisdom, the trading wisdom? I did one of my own, and I saw you. I purposely did not mention it when we were talking about both Boeing and crude oil.
Oh, my goodness.
Because, first of all, Boeing proved my theory that there are no such things as triple bottoms. Right?
Right.
Pull up the chart, Patrick. Well, first of all, that is the parting wisdom for everyone. There are no such thing as triple bottoms.
Right.
Trading lower, often quoted by Kevin. Let's see this triple bottom.
Okay, but let me explain something to you, okay? This is where you shit on me all the time about I'll buy it if it goes higher and sell if it goes lower. Shit. Now let me explain something to you, okay? This right here, while these are short-term swing bottoms, that is not the bottom of Boeing. These are bottoms of Boeing right over here. You can't just randomly choose bottoms that are just like randomly floating in the middle of the thing and, there was a temporary bottom and that counts as triple bottom.
I can do whatever the hell I want to do. That was a triple bottom, and it's proved my theory. There's no such thing
give
as
me a
triple
break.
bottom.
See, and I'll double down on that with your silly oil call on a triple bottom because you know what? The bottom line is that this was in fact the bottom of oil, all right? And just because it tested this level here 3 times does not make that the bottom. The very word bottom is at the bottom. Was that at the bottom?
Fine.
Was that at the bottom?
I'll change it to bottoms. I'll change it to support that's tested 3 times doesn't hold.
There you go. Thank you. Change it properly because this words of wisdom there was no wisdom. There was no wisdom in your words.
Okay. So my 6th grade grammar teacher here is giving me a hard time. Okay. Well, on that note, Patrick, it's been a lot of fun.
Was that? Okay. Was it?
Yeah.
Anyway.
So let's go to the end here, Patrick. I heard that you have some things you want to talk about. There's some announcements.
So once again, we're going to have a Huddle meetup without you, Kev. You've been dodging these Market Huddle meetups all over. By the way, when I was in Vancouver for the Vancouver Resource Conference, we didn't announce it on the show, but we did do a last minute VRIC. I was at that Vancouver Resource Conference, basically we had a little meetup at the Pacific Rim Hotel there in Vancouver. What a gorgeous hotel that is. But anyway, great to see so many members. I should have thrown a picture up there, but those of our listeners that did make it out to that meetup, it was such a pleasure meeting all of you. But in a few weeks, on the Money Show out in Orlando, I'm going to get out of this cold up here in Canada. I'm going to go down to Florida for a week, and I'm going to be at the Orlando Money Show from February 6th to 8th, and I'm going to be there with former Huddle guests, which we'll have back in the future, I'm sure. But Jeffrey Hirsch from the Stock Traders Almanac there, Ed Madola, and Tony Zhang, all guys that have been on the show in the past, are all going to be at the Orlando Money Show. Where you can see them at the show. We're also going to have a Market Huddle meetup on the Saturday at 5 p.m. as the show ends at the bar there. It's called Dave's Club, which is at the hotel lobby bar at the Omni where the event is being held. So those of our listeners that want to come out and have a beer with us, please show up. There's no RSVP needed. You just have to show up and have a beer. Well, hopefully we'll see many of our listeners out there. But yeah, it's going to be a great time, Kev.
Okay, so give the date again.
Between February 6th and 8th. So it's the Saturday that we're going to, though, have the
Patrick,
Huddle meetup.
This is terrible organization, bud. Give them the actual date. Let me do this for you here. Calendar.
February. Thursday, February
but you're going
6th,
out the Saturday, right?
But the Saturday is the February 8th date, and it's at the end of the show. The exhibit closes at 5 p.m., so we're just going to go to the bar right after the exhibit.
Folks, there you go. It's February 8th. Don't listen to Patrick.
You're such a ball buster.
No, but you're telling people they're not going to know. People are going to show up on the 6th going, where the hell is everyone? So
well,
February
on the 6th,
8th,
when they shake my hand, I'll tell them it's actually on the 8th, whatever.
Okay, here we go. February 8th at the end of the show at David's in this hotel wherever in Florida and Orlando, whatever.
Yeah,
anyways, go meet Patrick. Hopefully he'll remember.
You've given them such clear the whatever and there. Okay. Anyway, so Kev, let's move on.
Okay.
Look,
just a reminder that the Market Huddle is available on iTunes, Android Play, Podbean, Spotify, and YouTube. Lena was giving me a hard time saying, can you please, for Lena's sake, subscribe on YouTube if you're a YouTuber? And then I'm going to give you my plea. If you are listening to this on iTunes or anything like that, if you could actually rate us. And I'm assuming, as I said before, that if you made it this long, you probably actually enjoy us. So hopefully it's going to be something that you're going to be able to say something positive. Hopefully. And if you don't say something positive, at least make it constructive and funny. But rate us because it helps. It helps us get guests like Boris today and other people like Ben and all the great guests that we had. And that's ultimately why we want that. It's because it helps us in terms of with our, expose this to other people. And at the same time, if you have somebody that would enjoy the Huddle, make sure you pass it on to them. It's we have a lot of fun, but it would definitely help us in terms of expanding our kind of listenership in terms of getting guests because we found that the bigger the show, the more easy it is to get guests. So that would be a great help. Anyways, thanks for listening. We appreciate you taking time to join us and look forward to speaking with you again next week. I'm Kevin Muir.
And I'm Patrick Ceresna. Have a great weekend, everyone. By the way, you could follow Kevin on Twitter at Kevin Muir, right? And myself at Patrick Ceresna. And you can find us at bigpicturetrading.com as well. And otherwise, thank you very, very much, everyone, and have a great rest of the weekend. All right.
Lena, hop on.
That wrap-up was...
I did it, Lena. You got...
Was that bad?
There.
It was
good.
messy.
We did good.
I think we should record the wrap-up before you guys start drinking beers, because...
Nah. It's more fun this way. So, speaking of beers, let's do this.
Yeah, let's
Electric Unicorn.
I liked it.
I actually, you know what? I was kind of worried when you started talking about bananas. And... but I didn't taste any bananas.
Me neither.
And it wasn't milky. And so, it's not a bad beer. I'm good. Like I'm giving it a solid 7.9.
Oh wow, that's pretty high actually.
Yeah, that's solid.
Since when was 7.9? Oh, whatever. Okay, I'm not gonna say.
Okay, Patrick, what are you giving it?
You know what? Now here's the thing. I'm gonna give it a double rating. because no, let me explain. I'm going to give it a rating as the taste of the beer, which I'm going to give it an 8.5, which is that it's actually a really nice tasting beer, but I just can't feel like it's sessionable. Like I always think about a beer in terms of I can enjoy one and it's really good, but at the same time, would I buy a 6-pack and sit back and watch the Big Lebowski with cracking 6 beers?
With unicorn on them.
With a unicorn. You know what? I would give this a 7
for this. And
I would
Patrick,
give it a 7.5 on sessionability. So, like, what I would say is it's definitely a beer to pick up and try. 6.5%. That's probably wise because it's very strong. I was wondering why I'm slurring.
Patrick.
Yeah,
I'm taking the other side of this. First of all, you figured out the word sessionable, and you're like a 12-year-old.
I overuse it. My God,
overuse it. Like, let's face it, we didn't know what sessionable was. Like, a year
I know,
ago
but I like it. I like it.
I know you do, but they're always sessionable or not sessionable. It's like one of your criteria.
Yeah, I like it.
Okay, well, fine. That's fine. That's what makes a market. You can like it. Lena, what do you think?
I'm giving this a 7.7.
Oh, Lena doesn't like it.
It's not that I don't like it. It is strong beer, and I'm not actually feeling 100% today, so drinking is probably not the best idea. But it is like Patrick said. I don't know if I would be able to drink like a 6-pack of them.
Yeah, I actually didn't find it that strong. So sometimes I take a 6.5 and I taste the alcohol. And if I taste the alcohol, it's no good for me. I don't like it, but I didn't actually taste the alcohol. It was fine for me. Okay, Lena, I got something I want to talk about.
Oh,
it's it's definitely after hours.
Okay.
But I was wondering if you've seen this new trend in TikTok.
Where they're like dancing and stuff? Is that
No. So a certain male, there's a paper that talked about whether a certain part of the male's anatomy has taste receptors.
I'm sorry, certain part of male anatomy that may or may not have
No, that has taste receptors.
receptors?
But people have misinterpreted this somehow. I don't know. And so they are dipping it in soy sauce to taste it and putting it on TikTok.
This is just as bad as when, some of the teenagers thought they can get drunk off of vodka-soaked tampons. Have you ever heard about that? Yeah.
What do you?
Instead of drinking, because you get sick, right? Like you can vomit, you can pass out or whatever. This way, you get it straight into like.
Come on.
Yeah, alcohol-soaked tampons.
What is with this generation? Now, this is this is messed up.
You're blowing my mind here. What the hell?
We did some dumb stuff when we were.
This was like almost 10 years ago, I remember, that they were talking about it.
That was actually your generation.
Yeah, you millennials. Yeah. What the heck?
We want things now.
Us Gen Xers don't understand.
Do you know what I love?
Wait.
Sorry, go ahead, Lena. I didn't mean to interrupt.
So did you also experiment yourself about?
No, I didn't try it. No, I'm not gonna try it. I'm old. They'll like hang and like. No, I'm just kidding. Like I watched this comedian the other day that was talking. Russell Peters, I think, was talking about this. Have you ever watched Russell Peters? I think he's hilarious.
Oh yeah, he's hilarious.
Yeah, and he talked about that. So, anyways, I you know what my favorite memes are the things about the fact that the millennials fight with the boomers, and then the Gen Xers just sit in the middle and watch the world burn. I can't tell you how many different pictures of that just make me laugh because it's true. I like millennials. I think they're good. I admire them. I think that good for you
Except
guys.
for the
Only
taste of
because
beer,
you
right?
know me,
Yeah, no, but on the whole, millennials are good. Like I find some of their things a little over the top, and like
we're
the
a little
fact that they
dramatic, aren't we?
Yeah, and you take pictures of your food, which I don't understand, but I just view that as a generational thing, and I just I live with it. I watch on Twitter, even Twitter. I watch the younger guys that are on Twitter, and they have to show me what they're eating every night. And I'm like, why? Why? Like, I don't care what you're eating. Why are you showing me this?
We have this this need to share everything with everybody. You know,
No,
I think
like,
that's.
but
what
it's
it
true.
is.
You get these reporters or these like millennials that are like a high kind of like financial status, not financial, like in the in the FinTwit world. So they're mostly just talking about finance, and it's very interesting, great stuff. And then it's kind of 6 o'clock, and you go home, and you're like, okay, why am I seeing what you hate? I don't care.
Look what I had at happy hour.
And they talk about they sous vide and how they did everything, and like it's just like I'm like, and I just kind of laugh at them. So anyway, so be it. I live with that. I just accept that as difference, you know. So I don't mind the millennials as much as the baby boomers dislike them.
Can we please end the show?
Patrick has nothing to contribute to this
Dude,
conversation.
Patrick, you know why? 'Cause Patrick's gonna go find out if it really is.
Listen,
a
we
taste,
can
receptor or
we
not.
can all sing. Let's all sing "Kumbaya" and go find
he's
him.
going-
Let's go find a millennial
Don't,
and give
Patrick,
him a
don't
hug.
start with the soy sauce.
Listen.
Don't start with the soy sauce.
Start with the beer.
Try like a Sprite or something, and then work your way up to the soy sauce.
I dare you. I double dare you.
I'm done. I'm done.
I know. I knew that was going to take a dark turn. Okay. Have a great weekend, everybody.
Have a great weekend.
All right. Cheers, everyone.
Okay, see you. Bye-bye.